Hello and welcome. I'm Bob Currie, contributing editor at the Future of Finance, and my guest today is Milo Guastamacchia, founder and CEO at Yooro. How are you, Milo?
Fantastic, Bob. How are you today?
Great, lovely to join you. Nice and sunny here in the UK for a rare change, so that's doing us well.
Fantastic. And here from Lisbon also the weather is actually not too bad and we're going towards spring, so all good.
Good to hear it, and thanks so much for joining us today. It's great to have the chance to catch up and hear what you're doing at Euro and to share some of the development prospects and insights with our viewers and listeners. Just to get the ball rolling, Milo, for the benefit of anybody in our audience that's not had much exposure to Euro so far, could we please just say a few words about yourself and the company and summarize your objectives as a technology-driven securitization platform as you describe it? What is the value that you bring to the market?
Sure. Well, Euro is aiming to turn really private assets into plug-and-play securities. I mean, we're talking about plug-and-play bankable and tokenizable securities. And really is to make it easy for, think about European founders wanting to access capital markets and be able to design and make available to their investors securities effectively to be able to fundraise for their companies. But it's not just that. I mean, our plug and play solution is also targeting the other side of the equation. So we're talking about really investors themselves, either direct investors or investment professionals, and really also allow for them to easily and in a transparent manner and via a user experience that is conducive, being able to design and then easily invest in these private markets. And I would say that ultimately also to allow for regulated financial institutions, think about distributors to go out there and market these products and being able to kind of connect the founders and the capital deployers in these markets.
That's
And
great. Sorry, please.
And really, we have a three-pronged playbook and three steps that we use to go about doing this. Well, first of all, we have developed and we're further improving a fast and easy to follow kind of digital process for, as I said, both fundraisers and investors alike, to really price transparently and to design by interacting with us and our legal advisors an SPV wrapper that issues EU compliant, prospectus regulation compliant securities, which can then be registered and made bankable. When I say register, I mean that they can be recorded and made available via central securities depositories. Think about Crest in the UK or Clearstream or Euroclear in Europe. And does allow for delivery versus payment settlement via a financial institution, via a broker, via a bank. But can also be at the same time then tokenized, right? And being able to purchase directly by investors and potentially self-custodied. So this is the first approach. Second, we have developed and are also further improving once again an investor app. Okay, this investor app is really for prospect investors who wish to acquire the security directly. So those that do not want to go to the bank or to the broker, but they want to have the freedom to come into a marketplace, so to speak, find the right investment for them, select the one they're interested in, get qualified through a digital know your customer process, and then finally proceed to invest in it on a fractional basis, because that's what tokenization allows. And what do they receive? Well, they do receive a proof of ownership, because that's what a token is. It's a digital layer that represents the digital ownership of a security. And that token is minted with a smart contract protocol standard that is called ERC 3643. and then it's recorded once again in a decentralized manner on an open public blockchain. And I would say thirdly, we also make available a peer-to-peer, P2P secondary market amongst users. So for those that indeed have acquired a the tokenized version of a security, then we make it available to be able to post any interest either to sell that security, because obviously we're talking about most instances private markets. So by definition, most of the times it's illiquid investments, right? So was the way to be able to get some liquidity before maturity, and by building a community of potential sellers and buyers, and being able to give them the opportunity to communicate amongst themselves. Well, we allow basically for them to be able to get out of some investments because they may need some liquidity, and at the same time give the opportunity to those people, those buyers that may have missed the investment in the first place in the primary market, to be able to come in at a later stage.
Milo, that's excellent. I mean, there's quite a lot of information there, so let's just break that down a bit. Your website says you aim to redefine investor access to private markets. Now, is the essence of that therefore bringing real-world assets through tokenization into a digital environment? What's the essence of the redefinition that you're offering?
Well, we definitely want to reshape the experience and the availability of private market investments, as I said before, on both sides of the equation. So on one side, definitely we do want to bring to investors, whether these are professional investors, think about non-institutional grade investors, so people that may have smaller tickets, but they still want to bring opportunities to the attention of some of their clients. Think about family offices, think about wealth managers that want to make these trades available, these trades and instruments and type of investments in real world assets, in venture capital, in real estate, in receivables finance, in many of those non-public markets available to to their clients, to the investors whose mandate they are managing. And we do believe that having to go via a bank or a broker may not always be the right solution for these people, and there may be commissions involved. There also may be decisions around being able to self-custody these assets. Going into them directly is also very cumbersome for these, let's say, mid-market players. These are not institutional players that have internal big, legal departments, fiscal advisors. They need an easy solution to be able to get into these markets, and somebody kind of removing the administration out of it, and also being able to create an instrument that is fractionalizable, right? So that it's possible for those investors all together to put a chip in and then come to the lump sum, to the amount that is required to make that investment. And so this is really what we're trying to bring on the side of those capital deployers. But it's also true in terms of what we're trying to bring to fundraisers themselves. Okay, so once again, the other side of the coin of the private capital markets, because think about what fundraisers need to go through at the moment when they even think about having to go out there and fundraise, right? So first of all, they need to reach out to securities lawyers, right, to help them out to draft private placement memorandums, and then even private placement memorandums potentially that are they're compliant with security token offerings, right? So the blockchain and the digital asset side of things, if indeed they want to tokenize the type of investments that they want to offer and issue to the investors. Then, they will need to select and onboard um, a suitable tokenization software, tokenization solution, right? So you want to tokenize, well, you need a tokenization engine, and you need to select, and you need to pay for the technology. You need to work with them to be able to have the technology and effectively go and mint the token on the blockchains of interest, right? So this is another hurdle. Then you need to find a paying agent if you think about also wanting to make these securities available in a bankable format. And that's another hurdle. It is another economic and operational hurdle because, of course, um, these processes take time and they're typically costly. And you need to find the right provider that is also willing to work with you, right? And as a small to medium company, that may be actually quite challenging. Uh, then after you've done all of that, you need to build a marketing campaign, right? Because you need to go there and say, I'm here and I would like to raise capital and I'm an amazing company and these have been my results and EBITDA over the past few years. And I would like for you to, for instance, come in our next capital increase as an investor, right? And then, you need to go out there scouting for investors, potentially finding those distributors, those licensed entities, financial intermediaries that allow for you to, they're interested in, in helping you out with raising capital, right? For your own company. You need to appoint them. You need to go through legal documentation and vet them and kind of negotiate with them the economics around making sure that you don't leave too much on the table for these people that, of course, are helping you out, And then imagine after you went all through all of these and you found target investors, you need to onboard them. You need to KYC them. You need to vet them and whitelist them, right? Effectively. Um, you then need to deliver securities to them via bank, or you need to mint the tokens, and you need to make sure that you have the correct register. And imagine at the end of all of it, if you're in a country where all societary changes need to be recorded in front of a notary, well, you also need to have to go through the bureaucracy of going with your new cap table and all documentation and go in front of a notary and have everything authorized, right? And so, best case scenario, this process will take, I would say, 5 or 6 months, really in a best case scenario, and a lot of time and money will go towards, finding and coordinating work amongst lawyers, paying agent, tokenization, and KYC technology providers, a marketing agency, distributors, a notary, and you add them up. And so the question is, how many private companies can afford to do that, really? And well, not that many. So that's why here, our raison d'être as a business, really to kind of have this whole chain of events kind of recoded and have us basically do the heavy lifting, right? For fundraisers to step in the middle, step in between themselves and the final investors, and build a special purpose vehicle, right? A special purpose collective investment vehicle that kind of wraps the financing arrangement for the company that is fundraising, and issue debt securities that are bankable and tokenized. And we basically, since we already have our own security token offering program done and dusted, we have a team that takes care of administration. We have legal advisors. We have all the tokenization technology, digital wallet technology, KYC technology. We also can appoint and working with distributors, right? We can also assist them in raising capital. We're kind of a one-stop shop for them to have to avoid to go through all this process and make it cheaper and quicker.
So very quickly on that point, Milo, I mean, you've referred to this process as democratizing private markets. Where does the democracy piece lie? Is it the saving time that you've alluded to? Is it reducing intermediary costs and reducing legal costs and reducing the cost of administrators and paying agents? What is the essence of this democratization process?
Well, in our opinion, it's all of those, but I would say that if I had to think about big values and prioritizing what really democratization means, I would probably start from saying that it's about access, first of all. So obviously, if you have a 150K, 200K, even a 50K, minimum ticket for being able to access these private markets as an investor, well, you would probably exclude 99.5 or 99.9% of Europeans, right? And on the other side, if you fractionalize, if you find a way to make it easy to fractionalize these investments and make them available for smaller ticket size, right? Well, then the same asset could all of a sudden be made available to, a teacher in Lyon or, a startup founder in Tallinn or whoever it is within the European Union, right? So of course, we are aware that as Yooro, we are currently focusing on professional investors rather than retail. Okay, so we are not necessarily talking here about the 100-year ticket or 1K ticket to be able, as a minimum investment, to be able to get in as of yet. However, think about already the fact that these assets are in so few portfolios, even high net worth individuals' portfolios, at least within the European Union. We're talking about less than 1% of the total wealth of individuals within the world in general, is concentrated on and is invested on alternative and assets and private markets in general. So there's a lot of opportunities out there, starting from the non-institutional investors already to be able to come in and make it more easier for them to access these type of markets. So really, number one, once again, is for me is access, right? When we're talking about democratization. Second point is transparency. So think about and imagine a tokenized security, right? So a token that, because of its coding as a smart contract and the fact that it lives independently on chain, right? It can stream live data to the token holder. They can get live information on coupon accruals. If it's an interest-bearing product, for instance, how much have I accrued so far? What were the payments that were done in the past? Companies can stream financial information to them, management accounts, end of year audited financial statements, even kind of think about the latest CEO state of the union of the company, right? Information on how the company is going and what are the latest products that have been launched by the company. And even think about third-party ESG scores or anything else that may be relevant for kind of a holistic view on the company itself. So all this data with a token could be streaming live and could appear on a dashboard that the client has and kind of develop more of an experiential investment theory around investing in these private markets. So it's not just, okay, I put money in it and I park it and then I will probably see something in a few years' time. It's really kind of being up to date with what's going on with your investment. Okay, so this is, for me, is a very, very important component about democratization. So it's transparency. And third, it's about potentially it's about voice, right? So a token can embed, definitely can embed governance features, right? So this governance feature would, for instance, allow a token holder to cast a binding vote on a refinancing project on a solar farm loan for the company, right? And if you had an app that allowed you to see all these developments and to be able to participate in these decisions, you could vote via click, right? And that would be your proxy to to the meeting basically, and your voice being heard, right? So it is definitely, once again, about being able to get into this deal, about access, about being able to invest in them, and obviously doing that quicker and in a cost efficient manner. But it's also about, I think, what the tokenization technology can promise in terms of transparency and an agency and voice, right? For these type of investments in private companies, for instance.
You suggested that the sweet spot for Yooro is to apply securitisation and tokenisation in tandem, with the combination being much stronger than either of the parts. Just say a few more words about why that's so and how you deliver that combination.
Well, think of securitization, which is typically done via an SPV, right? It's securitization is a process of transforming an investment that is typically in a private market, right? So that it's subject to private agreements, that is not available for trading in a market, into, once again, a transferable security, right? So in a way, there's an implicit aim within the word, the term, and the practice of securitization, of being able to transform something that is illiquid into something that is more liquid, right? So really, securitization, think about it as kind of the regulatory and admin wrapper, right? Is most of the times bank can be bankruptcy remote. It's potentially tax neutral. It has developed economy of scales when it comes to day-to-day operations, and it has general partners or expert administrators that kind of can take care of the whole admin of it. So really, it is the regulatory and admin layer, right? Now, tokenization, I see it as kind of the digital skin, right? It is not a new type of instrument. It's just a layer that turns a security into 24/7 borderless instrument, basically. When I say 24/7, I mean potentially exchangeable, right? Or where you can create a liquidity, and it's also accessible, viewable from everywhere. You do not need to wait for your online portal via bank to be able to see how much you hold and sell it and exchange it, and you do not need to rely on third parties to do that. It's an instrument that you can self-custody, and this is possible through this skin, right? This digital skin that you add to a security. And so, sure, private companies, fundraising, for instance, they could go for, let's assume, issuing directly a security token. So just apply and use the tokenization, right, as a solution. But once again, remember the hassles that come with all of this, right, that we discussed just priorly, where there's a lot of steps that we need to go through, to be able to issue those securities. And kind of, that's where securitization in a tandem with tokenization comes into play, because it kind of steps in between, does the heavy lifting, and reduces the complexity that is around being able to go out there and fundraise. And so we do deliver this combo, right, of securitization and tokenization. We believe in the power of both coming together, and coming together using for tokenization especially the ERC 3603 standard, because this is what ensures compliance, and that whoever is allowed to invest in that security has been vetted and is being qualified to do so. And And so the upshot is that the SPV issues of securities, rather than direct issues of securities by fundraisers, they can be recorded on Clearstream, for instance, as a central securities depositories. They can be recorded on chain, and they can deliver financial instrument that can then be easily distributed within various European countries, right, through the EU prospectus regulation, and potentially even in other countries such as the UAE. And plus you have, as a fundraiser, for instance, or even as an investor, a kind of lifetime management of the investor's relationship, with the company or by the company.
That's interesting, yeah. And what about the secondary liquidity piece, Milo? I mean, you've made the point very importantly that these are exchangeable securities. We've talked already about the sort of securitisation and tokenisation piece, but for those clients you've supported already, how dynamic has been the expansion of secondary liquidity? And what can you do, and what can the market do to give a fillip to that secondary liquidity to make sure that exchange and trading volumes are growing in this area?
That is a critical point, I think, and I believe this is I would say, the promised land for tokenization, right? Because that should be one of the main benefits that the digital representation in a decentralized ledger should bring. Really, one of the main advantages, and one that a lot of investors are certainly looking into. And I know that at Future of Finance, there have been some interesting discussions lately around what are the pros and cons of various types of implementations on secondary markets and liquidity. Is it through the usual centralized players that we've seen so far in a 2.0 version, where, via the DLT pilot regime, for instance, we create these digital exchanges that they have order books, and they can exchange and then even settle, at the same time, these digital securities? Is that enough? Is that what we're looking for? Is the promise coming from DeFi? What are the pitfalls of DeFi? I don't think there is, as of yet, a consensus in the industry, but certainly what is already available, and what is promising, is already the fact that if you hold a token in your wallet and you're in control of that wallet, and you're within a community that has implemented the technology solution for you to be able to do so, right? And to be able for you to connect potentially to buyers that may be interested in holding what you do hold at the moment. Well, it is possible, and is definitely more feasible than if you hold the security in a bank account, to be able and create secondary markets and a liquidity around that. Okay, so I would say that the solution from a technology perspective is already out there, with these posting boards or P2P secondary markets, as you wish to call them, and as Yooro has implemented in our own investor app. And then, though, you need to build upon what the technology allows you to do, right? With building really the community and the number of users that make the marketplace an interesting place. Because obviously, if the marketplace is just made up by a few participants, then it is less likely that that product will ever be liquid and exchangeable, right? The more you have participants, is not a given, is not granted, but the more it is likely that that peer-to-peer market can work, right? And obviously, we are also aware, and we will definitely participate in the future development as participants and potentially also as collaborators and contributors, of course, to the new wave, which is going to be defined, I think, in the next couple of years of those digital exchanges that will receive a license from the authorities as per the new DLT pilot regime. There are a few players that have already gotten the license. There are not that many. The market is really, I think, in early stages. I believe big players will come into it. I do not believe that Euroclear, Clearstreams, or the likes will miss the opportunity, since it opens up a very interesting proposition for them to be able all of a sudden not just to be there to act as almost like a clearing house and settlement agent, but be there also as a proper market with all the books and being able to kind of take care of the whole process. So I think big players are stepping into the space, and we will definitely follow the current and allow for our tokens and our users to be able to have, on the side of the peer-to-peer market, also access to some of these exchanges where they could go out there and make available some of these tokens that they hold.
That's excellent. I'm just going to step. I normally asked you this question earlier, but we were talking about the mechanics of what you offer, so it was good just to stay with that for a while. But just tell me a little bit, as founder, Milo, about the foundations of Yooro, why you founded the company at that time, and indeed why the market needed a Yooro.
Well, indeed, I believe that as many founders and entrepreneurs uses a starting point, it's often right. It's of a frustration or a problem, right? For us, it was really for us founders at Yooro was really about frustration of the limitation of private market investments, the way these have always been done in the past, right? Of course, our backgrounds is varied. We come from actually wildly different worlds. So in my case, it's traditional finance. My other co-founders come from private equity, venture capital, tech startups, but we and also venture capital itself, in terms of having to source those companies to invest in as an investor, and being able to efficiently and effectively get access to them. There have always been solutions out there that I felt and we felt were suboptimal, and the reason was due to costs and times, right? So, of course, fund of funds and in general investment funds, collective investment vehicles organized as funds have been the primary access to venture capital in these type of markets when it came to less sophisticated investors, right? You would invest in a feeder fund or a big fund, and then you would have access to all these startups. That's expensive. That's expensive to design, but even as an investor, in terms of management fees to get into it, and in some instances, investors do not want or require let's say, an actively managed product that is a basket of various exposures to various companies. They really have set their mind to go directly into a specific company, specific entrepreneurial reality, and funds really are an overkill for that. At the same time, SPVs and securitization vehicles, they've always been available, but it's always been difficult to find the right players to help you out, building them efficiently and making sure that you could go out there and invest as quickly as possible and with minimum cost, right? So our raison d'être, the way we decided to go about trying to solve this problem of this cranky process of connecting investors with startups or with other type of private assets, was really to come with a solution that is very rich in user experience, so that it makes easy, quick, with a transparent pricing, to design and get access to those markets if you're an investor, or if you're a fundraiser, to go to market as quickly as possible and as cheaply as possible. And then to try and create a technology-rich solution via an investor app where people could find those deals, right? And this is really why we think the financial industry needed a Yooro at this point in time, and that's what we stepped up to do.
And on the buyer side, are you noticing already that this is attracting new categories of investors through structured tokenization that might not previously have bought directly into private capital issues or structured products, or, as you say, probably had to go to a feeder via a feeder fund previously with the associated costs and overheads that created? Are you noticing this is opening the door to new investors?
For sure. So, well, first of all, I would say that this is not necessarily a new category of investors, but definitely a new use case that was not easily implementable before, right? So think about professional investors that who are struggling to convince their bank or broker to onboard a specific security, a specific investment, right? This has happened a lot of times with our clients. Obviously, financial intermediaries have a vested interest in being able to promote, in-house products to those investors. So if you go to them and you say, well, I made up my mind and I want to invest in whatever I want to invest in, and this is, by the way, not a product that you promote in-house, well, they tend to make it difficult for you as an investor to access those markets. So really, it is still those investors, but we are catering for the use case where they cannot or do not want to go through a financial intermediary. They may not want even to pay, the trading commission, right? The brokerage fee that is charged typically by these intermediaries to acquire a security, and instead being able to access directly via our investor app, the tokenized version of the security, buy it, receive the token, and self-custody, and then potentially, as we discussed before, being able to do something with it after having bought it, right, on the secondary market, on the peer-to-peer secondary market. So this is definitely a category of clients that was underserved, in my opinion, in the past, that had these specific needs. Then I would say that, yes, there are fund investors, but I would call them fund investors 2.0, right? So these are, think about the fact that fund distribution is a very complicated affair. It's a troublesome affair sometimes for fund managers, because fund managers, they really want to attract investors, give them easily access to the fund that they're managing, to the fund that they built, potentially allowing them to subscribe via bank. Well, they need to hire a distributor, they need to hire a paying agent, and these players typically who sit in the middle have exclusive deals with the banks, and therefore they can afford to charge kind of hefty percentage fees to these fund managers, and often kind of take a big chunk of the management fee from these fund managers. And so instead, fund managers who can tokenize fund units, for instance, well, they can bypass such intermediaries and decide to target directly investors on a wider basis, right? So they could go out there. They don't need to be those investors that are definitely banking with an institution. They could build an experience in a portal for those investors to come in directly and not having to go through these distribution channels that are very costly for them. So I think this is another interesting use case for those fund investors that are sensitive to this type of fees, and at the same time, for fund managers that would like to kind of find another way to go directly to the wider audience. This is a really interesting use case, the one of specifically of tokenization without necessarily having to securitize their product, right? But then, think about retail yield hunters, let's call them, people that obviously they invest most of their portfolio onto public markets, but they want maybe to have access to a fractionalized version of a private investment. Okay, so once again, this was not available in the past. A French fintech broker can list in their app, a token, a security token that gives exposure to the clients to this type of security, and those that are specifically interested in that sector or that company can all of a sudden come in, something they will not be able to do very easily in the past. And well, lastly, I would see another interesting use case, which it is really for companies that may decide to raise capital, not necessarily through security tokens, but via utility tokens. So here we're talking about MiCA territory, and not anymore, MiFID or financial industry territory. But with MiCA and the MiCA regulations, they could issue a utility token with a white paper instead of a private placement memorandum. And such utility token, very interesting, can then be whitelisted in an AMM pool, and decentralized finance liquidity providers can actually stake potentially stable coins against the token and earn fees while providing a constant bid and ask spread, right? So there could be a way of leveraging that token, that utility token, as a collateral to be able to get leverage and get some more liquidity during the lifetime of the product. And so it can cater for people that are used to working on the DeFi side of things. And this is, I think, a very interesting use case that should be explored even more in the future.
Well, that's really interesting. We're getting a bit tight on time now, but I just wanted, I mean, you offer a hosted service. You also offer a dedicated client-tailored solution. Are most people going via the hosted route? I mean, how are your users taking up your securitization as a service offer?
So I would say that most of our current customer base is using our hosted solution. Hosted is effectively us acting almost like Airbnb, right? We are renting out an apartment. In this case, it's a compartment of our securitization vehicles, and so hosting is really a suitable solution for those smaller investors and players, such as single family offices. Think about smaller wealth managers, even reasonably sized private banks that would like to offer some bankable securities for the mandates of the wealthy individuals that they're managing. And it would not make any sense for them financially, in terms of time and effort, to decide to go for a full-blown dedicated solution where they create their own issuance instrument, right? And so they come to us and use our services on a plug-in basis, and we take care of everything quickly and with a reasonable cost for them to be able to really launch quickly the product. We also do cater for those bigger players that decide that corporate governance is an important feature they would like to control, and therefore, for those bigger players that can afford to spend a little bit more time in building their own solution, well, then we help them out to do so. And these are typically people that do so because they know that they are issuing a lot of tokens or a lot of instrument securities throughout the year. And then it makes sense for them to be in total control of the whole process, all the service providers, and potentially by virtue of having so many tokens that they issue throughout the years, well, they can even create some economies of scale and reduce costs internally, as opposed to a hosted solution that has kind of a standard price, and it doesn't create economies of scale, and it's equally proportional as the number of issues increases.
That's excellent. Given the time, Milo, I'm going to sort of bring things to a close, but I want to ask you, what are the next stages? What are the next steps forward in Yooro's development journey?
Well, the immediate journey in terms of where we are going for this year, at least, I would say primarily it's product expansion. We plan to add towards the end of this calendar year, so in the last quarter of the year, we would like to add to our offer another type of instrument for investment in private markets. So obviously, I mentioned before that we do create these SPVs. We would like to bring also the possibility to for investors, more sophisticated investors, and especially financial intermediaries, to be able to create funds. Okay, so adding funds to SPVs as a collective investment vehicle to be able to go out there and on an active management side of things, because that's the difference in between a fund and a securitization. In a fund, you can actively, as a manager, decide what to invest in, right, on a discretionary basis. In a securitization, it is a non-active management instrument, so the investment is set at the beginning, and that needs to be the one, right? So we would like to be able to bring that simplification of being able to design and launch collective investment vehicles from the example of what we do with securitization to funds. So once again, product expansion. We would like to automate the investment in tokenized securities. So think about a delivery versus payment for tokens. Right now, and for most of players within the tokenization industry that have implemented tokenization solutions, the process is still manual, right? So it's free of payment. There is an exchange of money, and then at a certain point, and often manually, the issuer receives that money, checks that it has been sent correctly and received correctly, and then it needs to manually mint the token, right? So there's this asynchronicity in between the investment and the delivery of the security. So we do want to automate that process to allow for investors to come in with both crypto but also fiat, bringing fiat on chain and being able to do a delivery versus payment via smart contracts, so that the investment process is really one click, as you would if you used as an investor Interactive Brokers or Robinhood or eToro. And thirdly, and also importantly, for us, a priority this year is to bring better tools for fundraisers, investment intermediaries. So we are building actually an app that is dedicated to those professionals. So one side, on both sides of the equation, and to allow for them to quickly and efficiently design wrappers for the issuance of securities, facilitate KYC for their investors, and also for intermediaries, for financial intermediaries specifically, to invest in the securities on behalf of the investors themselves. Okay, they have a power of attorney, they have a mandate, so they can invest on their behalf, and to facilitate this process for them after they've designed the solution itself. And then throughout the lifetime, monitor the subscriptions, monitor all the life cycle events of that security on behalf of their client, and even, very pragmatically keeping a tally of any fees or remuneration that as intermediaries they are entitled to, right? And so keeping the investors register and the remuneration attached to that. So these are kind of additional tools we provided to these players.
That's excellent. The SVBs, in my understanding, are structured predominantly under, or they are structured under Luxembourg law. Would that also be the case for the funds? Would that be typically be a Luxembourg domiciled fund, or is that still to be decided?
We will definitely start with offering fund solutions in Luxembourg. This is a domicile we know very well. We are ourselves, our company, our office, and our employees are based in Luxembourg. We have excellent legal advisors and collaborators, and the plethora of service providers, auditors, administrators that help us out. They're based there, so that's where we believe we can add more value and make these solutions available uh, for a more competitive price, and also for a quicker implementation.
Milo, it's been a great pleasure. Sadly, that is all we have time for, and our time is up. But thank you so much to you, and thank you to Yooro for joining us this morning. It's been a great pleasure discussing these issues with you. So thanks for that. Thanks for our viewers and listeners for tuning in. And I look forward to joining you for another of these online discussions very soon. So thanks so much and goodbye.
Thanks, Bob. It was a pleasure. Thank you very much for your time and thoughtful questions.